In this video, we are going to take a look at the incredible story of one of the greatest and most successful traders you've probably not heard of. This legendary trader created the candlestick chart as we know it today, and he made over $10 billion when adjusted for inflation. This trader went by the name of Munihisa Homma. He created the candlestick chart hundreds of years ago in the 18th century. There is no exact record for what year he created the first candlestick chart. All we know is that it was before 1755, as he released his book called The Fountain of Gold, the Three-Monkey Record of Money, in that year. He mentioned in this book that the market price behavior reflected the psychology of the market. This was the first time someone studied a price chart and noticed a link to the psychology of the market. Munihisa Homma was a rice merchant who lived in the city of Sakata between 1725 to 1803. He was born into a wealthy family of rice merchants, and when he was a teenager, his father let him run a large portion of the family rice business. During his early days, he wanted to trade at the Osaka Rice Exchange, as this was the biggest rice exchange at the time. Osaka was too far for him, however, so he continued to trade at the Sakata Rice Exchange. When Homma's father passed away, the entire family business was handed to him, and he decided to leave Sakata to trade in Osaka instead. The Osaka Exchange was different to the Sakata Exchange, as it allowed traders to trade rice that hadn't been physically delivered yet by using coupons given out by the rice merchants. The Osaka rice trading system was the first of what we know of today as a futures market. Homma became very interested in trading rice using coupons, as it meant he did not have to rely on rice being available. Instead, he could just try to predict what the price of the rice was likely to be at the time of delivery. During this time, Homma began to discover many patterns from the overall psychology of the market participants and the candlestick patterns we use today. A major factor for his success, which he spoke about regularly, was his understanding of the psychology of other traders. He gained much of this understanding from the candlestick patterns, as they showed him the emotional state of the traders in the market at the time. There was, however, a major problem for Homma's trading strategy. His strategy was based on each day of price action data, and with no internet or phones available, he could not get the price action data quick enough. The reason for this was because he was based in Sakata, and Osaka was around 600 miles away. The only way of receiving the data was for someone to visit the Osaka Exchange itself and ask the rice merchants for the price. With no high-speed transport available at the time, Homma had to think of a solution to get around this problem. The solution he came up with was to establish a network of people every 6 kilometers from Sakata to Osaka to give him the rice prices each day. This clever solution helped Homma to analyze his price data for each day so he could execute his trading plan. Since there was no paper, he had to use rice paper, which he received from a friend who made some of the best tofu in all of Japan. The papers he used to draw the candlesticks became his most precious possession over time. He had developed the candlestick charts and researched old records for around 15 years before he made the big breakthrough in his findings. In addition to the strange candlestick patterns, he would draw numbers across the bottom and along the side of the charts. Over the 15 years of research, he began to gain a gradual understanding from many of the candlestick symbols, and he began to assign names to the symbols. Some of the candlestick patterns you probably know about include spinning tops, dojis, and the hanging man. This became a frustrating task at times, as he would put in so much work to record the price data and create the candlestick symbols. The meanings he ascribed to the chart patterns became known as the Sakata rules, and he later wrote multiple books which increased his fame. Today would be the day that leads Homma onto a great amount of fame and fortune. It would be the day that leads him from being a rice merchant to achieving the greatest honor his country could give him. On Monday morning, Homma sat in his family rice warehouse and began to analyze the lists of rice deliveries and inventory. The next day, Homma arrived at the rice market, and the early harvest was good, but business was slow. There was little interest from the big rice merchants to buy, as they could afford to be patient. The biggest rice buyers operated under an informal cartel to control the local prices. Therefore, they could afford to wait. Large amounts of rice from the north and inland began to come into the Osaka market. Most of the rice merchants refused to buy as it was just the start of the harvest and many of their warehouses were full. Homma, meanwhile, quietly went about his business, greeting the growers and buying much of their offerings. As the day wore on, he kept buying more and more rice, and the other rice merchants began wondering why he was buying so much. They began to think he's being stupid and too impatient, as it was the early harvest. "Stupid boy, what an embarrassment to his family," the rice merchants would say. The next day was a Wednesday, and the same process by Homma was repeated. He kept buying, while the others kept ignoring the fresh rice coming in. At around midday, an exhausted horse and its rider rushed into the town square to deliver news to the leader of the Osaka merchants. The rider from the north came to deliver awful news to the cartel of merchants that late and unseasonal rains ruined the annual rice harvest. There would be a severe shortage of rice this year, and rice prices were going up fast as the commodity grew scarce. The Osaka merchants rushed to the rice growers to desperately purchase any last supply they could. As there was no abundant supply coming in, they had to buy any small quantity they could find from the smaller rice growers. "So sorry, all of my rice bales have been sold to Homma," said the largest grower. "What will you bring in tomorrow?" asked a merchant. "Sorry, all of this year's harvest has been sold to Homma," replied the grower. The same story is repeated from every grower in Osaka. Homma had cleared out almost all the rice on the market, and it was only the third day of harvest. The merchants began to get angry with the riders who delivered the news, claiming they were too slow, as they thought Homma must have heard the news of a severe shortage faster. They thought he must have some sort of courier pigeon service to know these things faster than them. The merchants were now forced to buy rice from Homma, and he was certain to ask for a big price. The next day, Homma's local workers continued to work through the night to store the huge supply of new rice bales in his warehouses. On the same day, the rice merchants of Osaka would be contacting him, desperate to buy some of the rice that they had mistakenly refused over the last 3 days. Homma's edge was not in faster horses or pigeons, but rather in the rice paper with all of those mysterious symbols and patterns. Day after day, year after year, he recorded these patterns in a very specific way to record the rice prices. Homma had invented the market charts, which were later to become known as candlesticks. From these candlestick patterns, Homma could predict with a high degree of probability the future direction of rice prices. After his huge success, he became the leader of the Osaka rice merchants. He then went to the Edo markets, which is now known as the Tokyo Stock Exchange. During his time at the Edo Exchange, it was recorded that Homma once had over 100 consecutive winning trades, and his fame quickly spread across Japan. It was said he made well over $10 billion in today's money when adjusted for inflation. He was widely considered the god of the markets, and he became a powerful financial advisor to the Japanese government. Later, he gained the highest honor for a Japanese citizen at the time, which was to be raised to samurai status. There are many things we can learn from Homma's legacy that can be useful for traders of today, even though his story is over 250 years old. He had some major benefits, such as the fact he was the only one analyzing the candlestick charts at the time, and he inherited a large amount of money from his father. The markets of today are obviously much different compared to back then, as we now have a huge difference in the volume and liquidity being traded. Also, institutional trading, most of which is done through algorithms, means the market is more efficient than before. All of this does not mean we can't still take away very valuable lessons from Homma's trading philosophy and psychology. The ability to make over $10 billion in today's money from hundreds of trades over the years means that we can learn valuable lessons from him. A major key to his success was the hard work he put in over a period of 15 years to record and analyze the rice prices. Can you imagine yourself working hard every day over a period of 15 years to record over 150 years of price data for very little to no return? The level of persistence and effort he put in was incredible. Another major key to his success was his understanding of the importance of the other trader's psychology. He mentioned this many times in his book called The Fountain of Gold. Homma was the first person to talk about the cycle of emotions when trading in financial markets. He knew about this only because of the candlestick patterns, as they showed him the emotional state of the traders. This lesson also highlights the power of using simply a natural price chart. To understand the price of a market, we only require a price chart because this shows the reality of the market. The additional indicators we put on often obscure our true understanding of the true reality of price because the indicators are derived from the price action. Therefore, using the price action of a market is the true reflection and reality of any market. Without Homma's discoveries, it's difficult to know how financial trading with technical analysis would have evolved over the years. It's important to recognize the importance of his findings and be grateful for his work. If you enjoyed this video, make sure you click the like button as it helps us make more videos like this. Also subscribe to the channel and check out another video about one of Homma's technical analysis techniques. Thanks for watching.